All right, gentlemen, let's wrap up with our bull or bear segment. As a reminder, whoever gets the stock, you only have 60 seconds to make the bull or bear case. Adam, we're going to start with you. Apple.
I'm a bear. I love Apple, I should say, but I'm a bear at these levels. I just think it's the law of large numbers. The company's become very, very large. Even if Microsoft recently passed it as the largest market cap company in the world, Apple is still a multi-trillion dollar company. Everyone I know already has an iPhone, so there's a limited cycle in terms of upgrades. I know they have a new headset. I don't know if it's pre-orders or if they're starting to show up now, or at least the review embargo came out this week. So people are, and it sounds like an incredible device that I would not personally buy because it's just too expensive. And maybe in a few generations of the device later, it'll come to be a reasonable price. But is it really going to be a growth driver? So, I'd say I'd stay on the sidelines at this price point. But great company.
I look forward to doing a podcast with you in the future with your headset on, Apple or Adam.
Yep, they look good. We could all have them on. Yeah. All right. So next, bull or bear, Austin on Netflix.
I'm a bear on Netflix, primarily just because it's starting to look a lot more like traditional TV. As they get into, live sports, they get into commercials. How is this different than traditional linear TV, other than they have some pretty good content, which they pay a lot of money for? So I think that the growth story might be behind it. We might be looking at more of like a normal kind of grower with attractive margins, but not the explosive margins that we've seen historically. And you might see a valuation normalization as the market starts to realize that the most attractive growth prospects might be behind them. I mean, they're looking into video games now. I think it's an interesting opportunity, but I just don't think that they're going to corner the market in all entertainment indefinitely.
Adam, bull or bear, Tesla.
I'm a bear on Tesla. Look, I think if you bought Tesla 12, 14 months ago at under $100, you doubled your money. Why are you waiting? Pull the trigger, take the cash and run. I just think it's the multiple. The multiple was reasonable for the first time ever at 90 or $100, and then it got up to 200 and something. And where's it sitting now? Just a shade under 200. But paying 45 times forward earnings for a company that is facing more competition than ever, always has manufacturing hiccups, needs to invest a lot of money in manufacturing facilities, is levered to China. There are a lot of reasons why I think the risk reward on Tesla is pretty dicey right here.
Austin, bull or bear, Devon Energy.
I'm a bull on Devon. It's had an interesting story over the last, call it 24 months. It was a darling of the oil patch for about a year and a half, and then all of a sudden it became the dud of the oil patch for the last year. A lot of that had to do with the fact that they had higher or more expensive supply contracts that lasted longer than other participants, so their margins contracted for about 12 months, and now we're rolling off of some of those more expensive supply contracts while oil prices remain at relatively attractive levels. It doesn't require oil to be at $100. It doesn't require oil to be at $80 or $90, but $70 to $80 oil will be a great cash flow generator for Devon, and we think that over time that's going to be a great capital return story for investors.
Austin, let's stay in the energy space. Bull or bear, Chevron.
Chevron, again, we're a bull, or I'm a bull on Chevron. It's one of those that had its own issues last year. I mean, historically, management's been kind of at the top of the game in the oil space, and they've been revered as one of the best management teams in the space. They had some hiccups last year, some execution issues, and the market punished them for that. I think that this is the opportunity for them to prove themselves. While they do have some pretty decent assets that should generate decent returns going forward, as the market starts to see management executing in a more favorable fashion, I think the stock has room to go up from here.
Adam, let's close with this. Bull or bear, General Motors.
Oh, huge bull on General Motors. Look, General Motors reported earnings today and they beat, but more impressive was the forward guidance, which we all should have seen this coming. Last year, they announced a $10 billion accelerated share buyback when their market cap was something like 40 billion. Like they bought back a quarter of the company in one go, which suggests that they are bullish on their prospects. And they're talking about doing another 10 billion of free cash flow in 2024. And the market cap is at something like 50 billion now. That's still another 20% of their market cap in free cash flow in 1 year. They went through a tough labor negotiation this year, and it felt like the labor unions did pretty well, but looks like you could have done better. Because they're making money hand over fist, it looks like. And barring some sort of setback, or the economy rolling over, it looks like, how can a company trade for 5 times earnings when they're actually growing?